So just what is the Earned Income Tax Credit? Some simply call it EIC, and why is it found in the Payments section of the 1040? The Earned Income Tax Credit is a credit for certain people who work and have low wages. The EIC may also result in a tax refund. The IRS website definition and background of the Earned Income Credit goes something like this. The Earned Income Tax Credit is a refundable federal income tax credit for low to moderate income working individuals and families. Congress originally approved the tax credit legislation in 1975 in order to provide an incentive for people to work. When the EITC is greater than the amount of the taxes that are owed on the return, it results in a tax refund to those who claim and qualify for the credit. For tax year 2016, approximately 27 million taxpayers received more than $67 billion in EITC. The average received per taxpayer was $24.55. To qualify for EIC, the taxpayer must have earned income from employment, self-employment, or another source, and must meet certain other rules. In addition, the taxpayer must meet the additional rules for workers without a qualifying child or have a child that meets all of the qualifying child rules. So how much can I earn and still qualify for EIC? Well, this credit is targeted at households with modest incomes, so if you earn too much, you may not qualify. But just how much can you earn and still qualify? It depends on how many qualifying children you have, and we'll define qualifying children in a moment. In tax year 2016, if you were married filing jointly, had 3 qualifying children, and earned less than $53,505, you would have qualified for this tax credit, or even for a refund check. So how much is the credit? The EIC varies based on income and family size. Last year, a family with 3 or more qualifying children could have received a refund of up to $6,269. Taxpayers may get money back, even if they had no tax withheld. You qualify for the Earned Income Credit if you are single, or if you're married, you don't use the married filing separate status. You, your spouse, and children, if applicable, all have Social Security numbers. You also qualify if you have income from earnings, for example, from a job, your own business, union strike benefits, certain long-term disability benefits, and you did not receive more than $3,400 in interest or dividends, or income from rentals, royalties, or stock and other asset sales during the year. You qualify if you and your spouse aren't being considered as a child on someone else's tax return for purposes of the Earned Income Credit. And you qualify if you're a citizen or resident of the United States. You qualify if you do not happen to have a qualifying child, but you are between the ages of 25 and 65, under age 65 at the end of the year, not the dependent of another person, and you've lived in the United States for more than half the year. If you're married and file a joint tax return, either taxpayer can meet the age test. The amount of the credit can be determined from the Earned Income Credit table that's found in the instructions for Form 1040 or in IRS Publication 596. Use the table to look up the taxpayer's income, family size, and then find out the amount of credit to which the taxpayer is entitled. Those whose incomes, filing status, and family size match the table in the right spots qualify for the biggest credits. The rules have been eased to result in higher credits for many households, especially those with 3 or more qualifying children. Those with incomes above the phase-out threshold qualify for lower credits until they reach the point where the credit is eliminated completely. Does my child qualify? Well, to qualify, the child must be your son, daughter, stepchild, adopted child, or a descendant. Your foster child, placed with you by an authorized agency or court order, or your brother, sister, stepbrother, stepsister, or a descendant of one of these. To qualify, the child must also be age 18 or younger as of the end of the year, unless he or she is a full-time student, in which case the student must be 23 or younger. There is an exception. A person who is permanently and totally disabled at any time during the year qualifies, no matter how old. To qualify, the child must also be a resident with you in the United States for more than half the year. Now here's an example. Shelley, who's filing head of household, has a total tax, which is line 63 of the 1040, on her federal return of $140. Total tax of $140. She had $100 in federal withholdings on her W-2. Her earned income credit was calculated to be $1,800. Does Shelley get a refund? And if so, how much? Well, her tax was $140. She had withholdings on her W-2 of $100, so her balance due is $40. But she had EIC of $1,800. So her refund is $1,760. EIC is a refundable credit. Now assume Shelley's filing status is married filing separate on her tax return. Will this make a difference on the amount of her refund? Absolutely it will. A married filing separate tax return does not qualify for the earned income credit. Let's take a look at another example. Bob is a 24-year-old single taxpayer with no qualifying children. He earned $21,000 for the year. According to the rules for EIC and the EIC tables, how much earned income credit should he receive? Well, if you answered none, you're correct. To qualify for EIC, a taxpayer with filing status single must be at least age 25 but under age 65 at the end of the calendar year. In summary, the Earned Income Credit, or EIC, computation is based on filing status, number of qualifying children, earned income, and adjusted gross income. If the circumstances are right, taxpayers who have no children may also qualify. The EIC amount is determined using worksheets and the EIC tables. The EIC is entered in the payments section of the return and is a refundable credit. Next, let's look at some review questions.